Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, with me Shel Bhatnagar, and this is the IPO special edition where we are going to be focusing on this new IPO that's hit the D Street in the fintech space, and that's Mobikwik or One Mobikwik Systems. The company's already got fully subscribed in its IPO the first hour of opening in today, and the retail portion has already booked over 5 times now. So you can actually see robust response that the company is already getting. Remember, this is a Gurugram-based fintech company, provides prepaid digital wallets and online payment services as well. Of course, the entire issue is a fresh issue of 572 odd crore rupees, and that's in the range of 265 to 29 rupees per share. And we'll be, of course, playing up some more details that you can see about the IPO while we interact with two special guests now. From the management, joining in right now is Upasana Thakur, Executive Director, Chairperson and CFO of Mobikwik Systems. And also joining in is Bipin Preet Singh. He's the MD and the CEO of Mobikwik Systems. Warm welcome to both of you. And thank you so much for taking the time out. Congratulations. It started off in a substantial way. We've seen a robust response already, fully subscribed in the first 1 hour. Upasana, we've been discussing and waiting for this for far too long, 15 years in the operations, and finally you see the light of the day on D Street. What's the feeling like, and what is it that your vision is for Mobikwik on the Dalal Street?
Firstly, thank you very much for having us today. I'm very, very excited and extremely thankful and humbled to the confidence the investors have shown in our IPO. I can tell you I had not dreamt that it would be filled up so fast while day one itself. So very excited about that. As to your point about taken 15 years, absolutely, it has been an exhilarating, exciting, arduous, an interesting journey. And I can tell you that the vision continues to be same. When we started 15 years ago, the aim was to create democratization of payments and financial services in India, to really have an impact on financial inclusion while building a profitable business. And the company continues to do that today, where we start our journey with the consumers and the merchants with digital payments, and then we go on to distribute financial products, be it savings products, be it credit products, or be it insurance products to them. So it continues to be a vision, and we hope to do the same for the next 15 years.
Ladies and gentlemen, a very warm welcome to you. Let's get Mr. Singh into the conversation. To you, Mr. Singh, what will you do with the 572 crores that you are raising as fresh issue? Let's presume the pricing is at 279. Now, what are these proceeds going to be used for?
Hello and good afternoon to everyone. So as you said, sir, so we are raising 572 crores, which is fresh capital going into the company, and there is no OFS, there is no promoter selling, there is no shareholder selling, which shows you that the belief and the conviction that we collectively have in the vision of Mobikwik that she talked about, Upasana talked about, is very strong. So we are focusing on two business models. One is that of payments, where we have 161 million users and more than 4 million merchants. So our first focus would be to spend money there to ensure that both in terms of technology, which is our strength, product development, new areas like AI, and in the different areas of payments, we continue to invest strongly and benefit from the growth of digital payments in India over the next 5 to 10 years. So that would be one area, broad area of investment, where we are putting in different buckets, some in payments and some in on the technology side. The second area in which we are going to put the funds is in the growth of financial services distribution business. So like Upasana said, right, our vision that India may everywhere banking should reach, and financial products, whether it is a credit, whether it is savings, whether it is somebody sitting 100, 200 kilometers from big cities, 500 kilometers, wants to invest in a fixed deposit, wants to save some money, wants to understand finance, wants to take a loan, we can provide that through our partners. And that is our distribution business. So that requires a lot of investment into building new technology, building new partnerships, and building new relationships. And so that second area of investment will be in the area of financial services.
Right. Upasna, could you also for
When you
us?
look at how digital payments have
Yes, sir, please
just
continue.
a moment, Sakshi. When you look at how digital payments have surged over the last 2 years, can you tell us what was the daily number of digital payments that were done on Mobikwik's platform 2 years ago? What is it today, and what do you hope them to be 1 year from now?
So, sir, we have disclosed certain numbers in our red herring prospectus. So I will have to stick to that. This daily number is not covered there. However, we have disclosed the annual active users, and that number has been growing steadily at the rate of, I think, 25 to 30% year on year over the last 3 to 4 years consistently. And even today, if you look at digital payments, you and I, we are amongst the smartest and probably people who understand finance and digital payments. So we use digital payments every day, but the usage of cash in the society is still very high. And only about 100 million people, maybe 150 million people are still very active users of digital payments. Whereas India's population is 1.5 billion. And whereas India's middle class itself, middle class, lower middle class itself, is minimum 400, 500 million. Whereas number of people with bank accounts is 800 million. Number of people with smartphones is only 700 million. But number of people doing digital payments is still not 200 million. So I think the opportunity for growth, I think people don't realize India is still in a very, very high growth phase and development phase when it comes to all areas of technology, but specifically in digital payments.
Right. Upasna, I also wanted to get a sense on how will you differentiate yourself from the existing players that are listed, something like a Paytm. Do you think, something what we are discussing in the quick commerce space, a duopoly of sorts with Zomato and Swiggy, is something that we will refer to with Mobikwik coming on board and getting listed with Paytm? Or are there absolutely some different unique aspects that one should be really looking at differently from Paytm now?
I can't comment about others, but what I can tell you is how we are different and unique. So the first thing I will tell you is that Mobikwik today is the largest wallet in India as per the data published on RBI website. And now that wallet is interoperable on UPI, wallet users are able to scan any UPI QR deployed by any of our competitors or banks and are able to pay there. So this is very unique about us because we continue to deploy on this strategy in a large way. Second important thing to note is that we are reaching this scale of revenue of 890 crores in financial year 24, and in first quarter we have done 345 crores. So you can multiply by that by 4 to see where we are in terms of annual revenue. We have reached this goal post only having raised 1200 crores or $150 million of capital till date since inception. In our sector, this is the lowest amount of capital raised. And yet here we are in terms of, comparable revenue to most of our competitors. The second thing I can tell you is that because we have not raised so much money, we have also not built the company based on marketing and incentives. The company has been built on product innovation. And the unique thing is in our sector, in a consumer fintech space, there isn't any fintech today that can claim that they have been able to do profitable quarters. And here I'm telling you that financial year 24 was profitable not just at EBITDA level, but also at PAT level. So I think the fact that we have been able to demonstrate high growth, a 50 to 60% revenue growth while showing profitability, not a path to profitability, and also continue to be the largest promoter driven fintech in India. I can assure you that most other tech companies in our space do not have this kind of shareholding. And in this IPO also, the promoters are not selling even a single share. Neither are any shareholders. So I hope that gives you a sense of how we are different and building for the future.
Upasna, all points taken in your favor. But what is the reason why your return on capital employed as also the ROE, if you see the 3-year average, it's minus 32 and minus 18%. As also the fact that first quarter FY25, you've actually again posted a loss. Any chances for profitability over the next 3 quarters?
So we are working with a profitable mindset. We want to achieve profitability in every quarter. We have been able to demonstrate profitability not just in financial year 24, but even in the first quarter. I would urge you to look at EBITDA, sir. EBITDA, as you can see, is profitable for us, more than 2 crores. We are negative at PAT level because you will see that we have invested in fixed cost growing up in the first quarter because we want to launch distribution of investment and insurance. So there are new verticals that are getting built, for which in Q1 itself we have made the investments, and the outcome from that will come in the quarters or with a period with a little. That is the only difference. Second thing I want to tell you is that this company has not raised any equity capital since June of 2021 when Ardia had invested 150 crores. So to go from a 300 crore revenue and a negative 120 crore 3 years ago to posting 890 crores, which is 3x revenue growth and a profitable PAT and EBITDA. I think for that we had raised a little bit of debt. Current debt position is around 55 crore. So between EBITDA and PAT, there is a finance cost that comes in. That is all I would like to say.
Okay. Let's get Bipin right here. Bipin, you were talking about the various segments that you are actually looking at. Could you break up for us in terms of key revenue contributors, 2 or 3 segments or verticals of yours that you are really looking at? Where is the maximum revenue contribution really coming in right now? What is the scalability there that you're looking at? And if you could just also tell us additionally, geographically, how is your revenue breaking up right now?
So good question. So, as I said earlier, we have two business models. The first is the foundation is digital payments. And digital payments, like Upasana said, Mobikwik is now India's #1 digital wallet. And in that digital wallet, we do of crores worth of processing every month, and it is disclosed in our financial data as well. So there, the business model is very simple. We work for a take rate, which means the merchants pay us a small take rate. To give you an example, if a customer uses Mobikwik wallet for 100 rupees, my gross income on that is something like 70 paisa or 80 paisa. And after deducting my major bank costs, even discounts and cashbacks, still I have a margin of 16% in the last quarter. Last year it was 19%, and the year before it was 18%. So one of the things that we do well is we have been able to build a payments company which is actually profitable at the margin level, and a profitability of close to 16%. And so that is what we are continuing to invest in and grow as a core foundation. The second model is that once the customer is already using Mobikwik, they love our user experience and they love the products that we have built, like Pocket UPI is one of the examples that Upasana mentioned, which is an innovation that Mobikwik has done and brought to the industry, where you can use wallet over UPI. But that means that we are adding subscribers at a very rapid pace. Just in the AMJ quarter, we added 50 lakh customers, new customers. Last year, it was more than 1 crore, close to 13, 14, 1.3 crores just in the last financial year. So the second business model is just focus on what else can we provide to these customers. And these customers are typically those who are not necessarily living in metros. Although you may love Mobikwik app, but you will be surprised to know most of our customers actually come from tier 2, 3 and beyond. For them, they don't get easy access to banking products from their bank. If they need a loan, if they need a credit card, if they want advice of financial nature, where to invest whatever little savings they have, they don't get that kind of advice because they don't have the kind of money which will attract the banks to serve them in a very appropriate manner. And that is where Mobikwik comes in. Mobikwik ties up with banks, NBFCs to provide loans under digital lending to these customers. Mobikwik ties up with banks and NBFCs to provide saving instruments like fixed deposits. Mobikwik has tied up with account aggregator framework to let customers view their entire bank statement of any bank directly on the Mobikwik app. And in this entire business model, Mobikwik's role is that of a distributor. This DSA is an age-old model in banking, where some distributor basically sells products of different banks to the customers, and the customer need is met. So that is what we are doing. We are a digital DSA, and we make a small commission whenever the distribution is done. In this business, we obviously have higher margins because we don't have to incur additional marketing costs or customer acquisition costs. So you can see the numbers that actually it's almost as high as 40-45% in the distribution business, which I believe will continue to stay in that and in that zone, and we will be bringing new products and more products within this, beyond which what we have already mentioned. And the contribution of this business to our top line is also 50% if you see the AMJ quarter. So this is we are going to build the business, two main businesses: payments, take rate business, distribution, commission business, and both of them will go hand in hand.
Right. When we look at your customer acquisition costs, Mr. Singh, they've risen from, I think it was 18 rupees some months ago to about 24 rupees. Are these customer acquisition costs on an uptrend on a secular level, or do you see them maybe tapering off in the coming 3 or 4 quarters? How will they move?
So I cannot give future projections, but what I can tell you is that the amount of marketing budget that we spend on acquiring customers is one of the lowest, if not the lowest, in the industry. And so accordingly, even if there is a movement in customer acquisition cost from 10 rupees to 15 rupees to 20 or 30 rupees, we are not overly concerned because these are well below what any competitor or any peer company can acquire customers on. And we have shown that we are able to acquire customers in the last many years at these kind of customer acquisition costs. So overall, we are not concerned about these, and we believe that even if they go up a little bit more from here, even then we can absorb that cost simply because, like I said, the business is growing rapidly and margins are growing. And one of the questions you asked is whether we will stay profitable or not. So I cannot answer for future, but what I can tell you is Mobikwik is still a company in investment mode. It is a company in growth mode even after 15 years, because the opportunity which is there for the next 5 to 10 years is still very, very big. However, our growth will not come at all costs. Our growth will not happen just by burning away cash that we are raising or that we have raised. We've reached a steady state where we have demonstrated profitability, so our marketing costs are stable at all times.
Let me bring in Upasana on the same question. Upasana, help us understand the visibility on both revenue and profitability over the next, say, 3 to 5 years from here on. What is your own internal expectation right there? What is the growth rate, if at all, that you are expecting, that we can expect from you over the next 1-2 year fiscal years as well?
So I can't give you any forward-looking number, but what I can guide you to is FY23 to FY24 revenue has grown 9% for the company. In the prior years, we have clocked 50% revenue growth quite a few times year over year. So you can assume that the company will intend to grow at the same clip in the next several years. On the profitability side, like my co-founder Bipin explained, we make 19% margin in the payments business. We make 44% margin in the distribution of financial products business. At a blended level, this comes to early 30s. So 32 to 35% is the blended contribution margin of the business. And the fixed costs are the only thing below that. And if you see the fixed cost trend, fixed cost has been coming down substantially. It has come down from 47% few years ago, 33%, and now 30% in the first quarter. And I think the gap between them is where operating leverage kicks in. So we do expect that as the company ramps up revenue and fixed costs remain in check, EBITDA will start flowing.
Right. Mr. Singh, my last question to you, sir. In terms of actual number of digital payments, how many of them are from handheld mobile devices and how many of them are still at desktop? Can you give us a trajectory on how they have changed over the last 2 or 3 years?
We haven't disclosed those numbers in a prospectus, but I can tell you overall from the industry what I know is that handheld and mobile phone would be more than 95% of all the digital payments. I think desktop and computers, even by the number of desktop and computers and laptops that are there in India, if you see the count, that's a very, very small number, less than 5%. So I would say that Mobikwik numbers would also be in similar zone, but I don't have that specific number right now.
Okay, got that. Upasna, I'll also ask you one last question, and that is on the competition bit as well. Most of the analysts are highlighting that this space is intensely competitive, with more and more players going to be, scrambling for a pie in this space. Of course, you are one of the pioneers here. You are the largest in some senses that you've already shared with us. How do you expect to continue to protect your market share and probably grow also from where you are currently?
So absolutely, I think we are all aware that globally, fintech India is now the third largest market in the world. So absolutely, it has attracted many entrepreneurs, many startups exist within the different niches of fintech and specifically in the digital payments aspect that we also do. So there are many competitors, and I'm sure many more will also try to come in. I think that this is a sector which will see a lot of expansion in India. Just like we have 100 plus banks in India, you should assume that India will have a plethora of fintechs serving the market. That said, specific to Mobikwik, I can tell you that we have dealt with intense competition in the last 15 years, especially in the last 8 to 10 years, where global behemoths have invested billions and billions of dollars in many of our competitors. We have not raised as much capital, and yet I'm sitting here today to tell you that we are doing a very close number of in terms of percentage of revenue that the large players are doing. We are not far behind. We are growing very rapidly. We are already reached almost 1/5, 1/6 of the total revenue of many of the other competitors, and we are able to do it profitably. So I can tell you that Mobikwik is intending to follow its own path. We will not digress. We will continue to focus on building out for digital payments for the middle Indian, for the consumer, for the small kirana store, for the merchant, bring them all financial products that they need on their app. This is our focus, to be profitable every year, every quarter, and that is what I can tell you about our growth prospects.
You've talked about at least 100 digital payment companies doing very well in India, and let's hope many of them come to the IPO market. My final question to you is, you just said that you had taken some debt to instead of equity to meet some normally incurring expenses. Is there a mood to pay down debt that is existing on your portfolio, and if yes, when will you be debt free?
So we have not put it as a use of proceeds in the RHP because the debt itself is very small. The net debt position is around 50 to 55 crores right now. So we will intend to pay it off, as per the payment plan that is already in place. But I can assure you, with this capital in place, we also intend to use it for working capital in our payments business, which we have put as one of the use of proceeds in the RHP.
Fine. Thank you so much, Mr. Singh and Ms. Taku. And here's wishing you all the best. You've already been subscribed once, and there are 3 days left, as Sakshi points out. Let's hope for a bumper listing, and all the best to you too.
Thank you very much.
Thank you.
All right.
That, ladies and gentlemen, was Mr. Singh and Ms. Taku, who are the co-founders of the IPO bound Mobikwik, priced at around 279 rupees a share. The company is raising 572 crores, of which to fund organic growth, R&D expense, capex, and for payment devices. Over to you, Sakshi.
Thank you so much, Shell. And with that, we hope that all our viewers would have taken in all those notes from the management as to what the vision is about this IPO going forward. We'll continue to get you the experts' views as well as to what does it make really sense for you to subscribe to this one at this stage? How are the valuations? Because that is one tricky part right there. We'll have to see how it really goes forward from here. We'll wrap it up at that, but do stay tuned. I'm coming back with another edition of Daily Calls right up next.
Hello and welcome. You're watching Royal Rantham Board Presents BT Golf. I'm Sakshi Batra and with me is the celebrated Indian cricketer Suresh Raina. Welcome to you, sir.
Thank you, Sakshi. How are you?
I'm very well. Thank you so much. I hope the same for you too. It's been exciting. We missed you at the